So you've heard from Nova Minerals over in Alaska. Now we're going to zoom right back to Western Australia, and we're going to hear from a very exciting company because they're not only an explorer, they're a developer. And they are in Western Australia. They've got the Warrawoona Gold Project in the Pilbara. Here to tell you an investor update is Dave Reeves, the Managing Director of Calidus Resources. Over to you, Dave.
Kerry, thanks very much, and hello all, and thank you very much for joining us today to hear a bit more about Calidus. Calidus is a gold development and exploration company based in the Pilbara of WA. We are literally moving into development as we speak. We aim to have first gold out late next year, and it's just a perfect time in this gold price environment to bring a new gold project on in WA. So let's tell you a bit about the company Calidus itself. So this is a story of consolidation. We listed in June 2017. We had 400,000 ounces of inferred resource. We've taken that to 1.5 million ounces. We've done an updated pre-feas a few weeks ago that showed some really robust economics, which I'll take you through later. With that came an increase in resource and reserves. We've got a lot of drills turning at the moment, and as I said, getting ready for development later this year. Just a little bit about the company. We've got just under 270 million shares on issue. We just completed a $25 million raising, so our bank balance is looking really good at just under $30 million at the moment. That gives us an enterprise value of about 123 million for the company, and when we talk about our EBITDA later, that's around a year's EBITDA as our market cap, and that's where we see a lot of potential for a share price re-rate. Hugely experienced board and management team that have built mines, that have operated mines. You know, we're very much mine developers and operators. And we just brought on a couple of new guys. Richard Hill recently as our CFO. Richard has been involved in junior gold financing for most of his career. And as we move into that debt financing stage, which we're in the middle of now, hugely valuable to have on board. Paul Brennan joined us a little over a year ago. He most recently was GM for Saracen Minerals at Carosue Dam. Don Russell's just joined us. He'll be the GM at Warrawoona. He's worked all around Australia for mainly gold mines, underground, open pit, massively experienced GM, and we're really blessed to have him on board, and a great geology team with Steve Shepherd heading that up on the regional side. Mark Connolly needs no introduction to a lot of people in the gold space. Myself, I've been involved with building 3 mines. So again, just really emphasising the depth of skills that we have at Calidus. Other important point here, Alkane Resources, 12.7% largest shareholder. They're obviously a gold miner in New South Wales and kicking a lot of goals lately with what they're doing drill-wise. They've got their stake through investing money in placements over the last 1.5 to 2 years, and have been a fantastic and supportive shareholder to date. So a little bit more about the project. Where are we? Well, we're up in the Pilbara. This is a really exciting place to be at the moment. Obviously, De Grey's having really good success. Capricorn's being built. Ashburton project's just been acquired. So really a lot happening in gold. Millennium's just been bought out by Novo. So really a bit of an unloved part of Australian gold until recently, but really getting a lot of attention now. Infrastructure-wise, it's as good as you get. This is the epicentre of iron ore mining in Australia. So we are going to get our gas, our LNG from the Northwest Shelf here at Dampier, and we'll be trucking that in. That gives us really low cost, 19 cents a kilowatt hour power. We've got bitumen roads from Port Hedland into Marble Bar. Marble Bar itself, we've just signed an MOU with the Shire of East Pilbara to upgrade the airport. That's a $7 million upgrade. Shire put in 5, us 2. And it just shows how supportive the Shire is of what we're doing up in Marble Bar. We've bought 240 rooms, camp that's sitting up at Marble Bar now, waiting to be installed later this year. Telstra we've signed up with to provide comms, but really the backbone of infrastructure is there, and with Marble Bar only 25 kilometres away on an all-weather road, it's a wonderful location to build a gold mine, and that keeps that capital cost down. Talk about resources, 1.5 million ounces of resource, really based around one deposit at Klondike between an open pit and an underground. The open pit underground cutover is about 180 metres below ground. The deposit is open at depth and along strike. And we currently have drilled some pre-collars for this drill target area at depth, which is targeting about 550 metres below ground, which is about double the resource depth of, on average, 250 metres. So those holes will be drilled in the next month or two, and we'll get results out thereafter. And what we're trying to show there is that this deposit really is going to go for a lot longer than the 8 years mine life we've currently got modelled. We've done some quite intense drilling here. This ore body does outcrop its surface, and you know that is really unique and very helpful for us in development. We can map it, we can sample it, we can trench it, and we can drill it on very close spacing quite cheaply. So that's a 12.5 metre by 12.5 metre spacing. Just basically means, apart from turning it into Swiss cheese, really getting confidence in the geology of the deposit. What does that equate to in reserves? Over 500,000 ounces in reserves at the moment. As I say, with that underground go to grow over time, that will just increase. Strip ratio at a 0.3 gram cutoff is 3.6 to 1. That means we move 3.6 tonnes of waste for every tonne of ore. That's incredibly low and means that this is very low cost mining, cheap mining on a cost per ounce basis, really good for cash flow. The metallurgy side, you know, this is as good as it gets. We're looking at putting in a very simple crush, grind, gravity gold, cyanide leach to produce gold bars on site. We get really good recoveries. It's a very coarse grind. And with that coarse grind, it means we don't have to put as much power in because we don't need to grind it as fine. And the rock is quite soft as well at that 7 to 12 kilowatt hours a tonne. It means, again, we don't have to put as much energy in. Both of those things means we have a very low operating cost of around 15 Australian dollars a tonne for each tonne we mill through the plant. You know, one of the things we do talk a lot about is de-risking. You know, this is the most critical part of the journey for a company, and you've got to get it right as you move into development. So what have we done to help with that? Well, we have done, you know, an updated pre-feas recently where we've changed our modelling style. We've gone for this very large block model, and what that means is we're diluting the high grade out. It reduces our overall head grade, but reduces the risk by not overestimating that high grade material, which is a common theme in new startups. We have at the moment included a place for a ball mill to help with grind size and guaranteeing that. We're looking at open pit only for the first 3 years, mainly that Klondike pit, before we go underground. So originally we were going underground at the start, but we've pushed that back. So we've just got that single focus. We have got EPA board recommendation now, and we've gone out to tender, and we've now received all the bids for the EPC for the process plant, mining tender, tails dam tender, village tender, power tender, etc. So all those costs are coming in fixed for our definitive fees. It's coming up in just over a month's time, and that's part of the de-risking process. The other thing I'll just emphasise here is if you look up in this pinky red area in the cross section, you can see that intense drilling. That's our measured drilling on 12.5 by 12.5. And what that's showing is we're tending to get some good grades coming through from that drilling. And that's just a factor of the more drilling we put in, the more confidence this modelling style has to put higher grades around it. You can see it wherever there's a drill hole, it has that confidence. And we certainly believe as we drill this deposit on that close spacing, we'll see a lot more of that high grade. And we did see that the closer the spacing, the higher the grade we see in the model. So economics, what does that mean? Capital cost all up, updated pre-feas estimated 116 million all up. Our all-in sustaining cost, $1,250 an ounce. Gold at the moment over 2,700 Aussie an ounce. You know, there is an incredible margin on that of around the $1,500 an ounce on that 85 to 90,000 ounces, and you can do the sums, you know, yourself on that. That cash flow per annum is in excess of our current enterprise value. Again, coming back to that opportunity for where we are. If we look at that EBITDA at 2,500, it's 97 million, as we said, but at 2,750, the project cash flow, goes up by over 100 million post-tax, and that's where we're sitting at the moment. So just incredible economics. NPV, at the moment, post-tax approaching 400 million. And again, just bearing in mind our enterprise value of 120, 130 million thereabouts. Payback at 2,513 months, it's less than 12 months payback on the current gold price. So just phenomenal cash generation. And again, just reminding why is that? We've got ore outcropping at surface. It's open pit, low strip ratio, low processing costs, equals lots of free cash flow. How do we get to that money? Lots to do. It's very busy times at the moment. We have got that EPA recommendation. We're waiting on ministerial sign-off. We hope to get that in the next few weeks. We're about to submit all our operating permits that we need to get in by end of year. The feasibility study is due out next month, so watch this space. We are starting to receive indicative debt term sheets, and we're pleasantly surprised by that, and we'll put out further announcements on that shortly. And we would anticipate closing that finance facility late this year, with first drawdown early next year. We've gone to tender, we've received the bids, we're now working through our preferred contractors. We will start early works very shortly in Q4, and that will be access road, village, communications and water, and that allows us to have a base to commence construction early next year, and from when we begin construction it's 10 months to first gold bar. So lots happening, lots to be seen from just the study and development point of view, and news flow coming up. But that's not all we're doing. So we've got that obviously as our key value driver, but exploration, super excited about what we have out here. As I said, the Pilbara is largely untouched and underexplored. So we're very excited about A, the tenure we've got at Warrawoona. That includes near mine. And B, some of the other projects we're starting to pick up. We are looking further afield. We believe once we have a mill in the centre of these two granites, and this is where the gold's mainly around, we'll really be able to consolidate this area and get that hub and spoke model going and trucking ore into a centre part. So again, watch this space. We are certainly looking at other options out there to acquire and add to our resource inventory. Near mine, we've talked about Klondike, and there's another trend called St George we've done some drilling on. All these other trends we need to follow up on, but we've been holding off while we just focus on Klondike and moving it through feasibility, and also waiting for this, which is our recently flown detailed aeromag. We've now got that in. Our geos are starting to move out to the field to check on the ground what they're seeing in the aeromag. With that came radiometrics, which again is another tool to help them identify targets, and add that together with the soil sampling we've done previously. And we've got an exciting 12 months ahead at Warrawoona. But where we're at the moment, drill-wise, we've got a drill rig churning out here. We've completed a diamond hole already. We're now onto the RC drilling out at OTWAYS and what we call Malachite Flats. So this was drilled in the 60s, 2 lines, with some really interesting copper numbers. Never assayed for gold. We know there's gold along strike, so we're putting in some holes at OTWAYS initially, assay for gold, copper, etc., and let's see what there is. Malachite Flats is a really big gold lag anomaly, and we've done quite a bit of rock chipping, and we've announced that, up to 13, 15 grams a tonne in rock chips out there. So pretty excited about this whole area because it's a big fertile system, and so really we're just starting to scratch the surface now. How do we try and compare ourselves? It's not resources, reserves. This is cash, cash generation. So in particular here, if you look at enterprise value versus free cash flow, so that's the value of the market cap of the company minus its own cash holdings, divided by how much cash we produce each year. We're sitting at around that 1-to-1 ratio, whereas the average producer sits at around 5-to-1 and up to 9-to-1. So you can see that there is a massive re-rate potential as we move into production. And, you know, that's certainly what gets us excited and why we've put our money into the company ourselves. So in summary, a team that's done it before and wants to do it again, really high margin, low risk. You know, we've done everything we can to de-risk this project. We've accelerated towards early works development next quarter. We'll be moving into construction next year. We've got the drills turning on various greenfields and brownfields projects. And through all of the above, we do see a massive re-rate coming in the future. If you do have any queries, there's a lot of information on our website, and there's various email addresses to get in touch with us. And please drop us a line if you've got any questions. Thanks very much.
Well, Dave, my goodness, listed in June 2017, you guys have been absolutely busy, and you've got a busy few months ahead of you as well. In terms of, you know, the investors that are looking at this right now, you talk about a re-rating. Do you think that you've been flying under the radar a little bit in the market and people don't really know who Calidus are?
Yeah, because we haven't been around that long, there's no doubt we have flown under the radar. It's not a household name. Sounds more like a Roman chariot brand or something, Calidus in many ways, but it does mean hot in Latin and is in sympathy with Marble Bar, hottest place in Australia. But yeah, so 3 years doesn't give you a lot of exposure. We've quietly gone about our work, and you know, we are starting to promote more as we head towards production. But yes, that is the opportunity for investors. Not many people know about us still, and yeah, that's something we will address over the coming months. So,
Dave, I also noticed that you're looking at, you know, literally producing your gold bars towards the end of 2021, which is not that far away. And for those of you that are listening that don't have any real exposure or understanding of this, there's two things I want you to know. One, it normally takes a little bit longer to get into production. So these guys have really motored. And number two, I don't know whether you picked it up, but what Dave Reeves just said is that the directors have all got skin in the game. That's a really important thing that I've spoken about during today, and one that lets you know that they're putting their money where their mouth is. So Dave, one last question for you before we do have to wrap up, and that is, you are out in the Pilbara. Water and power, are they any issues for you, or are you close to water and power?
Yeah, so power-wise, as I said, we'll be getting LNG from the Northwest Shelf, so that'll be coming in road trains to a gas-fired power station. You know, we will tap into some solar for the water bores and what have you where we can, because we've got plenty of sun up in the Pilbara. So that's not a problem. Water comes from a combination of dewatering, so as the pit goes deeper, we'll actually have more than enough water there, but initially we've got to put in bore fields. So we've had a rig for the last 6 months trundling around the area, drilling certain structures, making sure we've got enough water to start with. There were some big old tin mines, alluvial tin mines and gold mines out there in the past. They put in lots of bores, and you know, there's some pretty good water out in that part of the world. So that's what we just need to lock in through our water licensing, which is one of the things we've got to complete by end of year, but you know, well and truly in hand.
Okay, well, that was a really, really interesting presentation. Thank you, Dave. And as Dave said, ready for a re-rate? Calidus Resources. Thanks so much, Dave.
Cheers, Gary.